Welcome back to the NWR Investor Conference Series 11. I'm your host, Banjo Blake, and next up we have Lindsay Australia. Lindsay Australia is an integrated transport, logistics and rural supply company. The company has an extensive East Coast network of in excess of 40 stores and depots. Joining me this afternoon is from Lindsay is CEO Kim Lindsay. A quick reminder to the attendees that you can submit questions via the Q&A box in Zoom, and these will be addressed at the conclusion of our session. Thanks for joining today, Kim, and over to you.
Thank you. Lindsay Brothers Transport was founded in 1953 by Tom and Peter Lindsay. It's grown and adapted over the years. It's one of the largest refrigeration companies in Australia today. The company now operates 3 core divisions from our 30 unique locations. Lindsay Transport specializes in refrigerated logistics with a specific focus on food processing, food services, and fresh fruit and produce sectors. Transport operates over 300 line haul trucks, which are supported by 600 refrigerated trailers. The division recently expanded into rail and now operates over 350 refrigerated containers. Rail operations are underpinned by a relationship with rail operator Pacific National. Lindsay Rural, a leading independent rural merchandise, specialising in a range of products, including corrugated packaging. Lindsay's agronomists work closely with growers, providing expert advice. The Rural's packaging business is supported by a distribution agreement with Visy Board. Lindsay Fresh is an important import-export specialist and operator a major refrigerated facility in Brisbane markets. Fresh offers a range of services, including warehousing, biosecurity, ripening, and import and export logistics from both sea and land ports. The combination of all these 3 divisions enables the group to provide unique vertical integration solutions for customers with a single point of contact. The group's very focused on geographically and throughout the range of services it offers. We now operate facilities from Mareeba in Queensland to Perth in Western Australia. The spread of facilities across key growing areas is unique and provides coverage for large national customers. Most recently, the Lindsay Group has expanded through our organic growth strategies of investing in refrigerated rail operations and by increasing Rural's footprint into high growth horticultural regions. For our first half of the financial year 2022, the group generated 274 million in revenue, 31.4 million in underlying EBITDA, and an increase of 20.2% on the previous year. The group is supported by long-term investors, including Soul Pattinson's. The financial overview. The group's expansion into rail and focus on rural continues to deliver strong growth for the group. The key balance sheet metrics have all improved, meaning the group has maintained its debt level despite almost 50 million invested in rail operations in the past 3 years. The business experienced strong demand for road, rail and rural services in the first half of the year, and the demand has continued in the second half. Both transport and rural contributions to a positive EBITDA growth for the half year. Transport continues to see strong demand for both road and rail services, with the demand across the sector outstripping logistics capacity. We expect this trend to continue as long lead times on new equipment orders impacts operators' ability to gear up to meet the demand. We expect to see distribution in the space for the foreseeable future. With the additional rail capacity the transport division brings on in the last quarter of FY22, rail expansion will continue to deliver the growth for transport. And in 2023 financial year, when the rail is expected to contribute close to 30% of transport division's revenue. Rural continues to see strong growth from increasing its presence in existing and new high growth regions by increasing its share of spend with those customers. Strong financial performance for the first half of the year has delivered a strong balance sheet and positions the group well to look into the future. Rolling 12 months return on investment capital was over 11% at the end of December, and with the lower capital intensive nature of rail operations, we expect further improvements in the coming months. Transport continues to deliver a year-on-year improvement due to the investment in the division's network, reach to facilities, as well as its rail strategy. Transport delivered a record underlying EBITDA for the first half of the year, driven by strong demand for road service. The division continues to expand its rail fleet with another 50 refrigerator containers due to the operation by the end of the financial year. The group will have over 400 containers in 2023 financial year. Transport Australia plans to add more road capacity in 2023 with the addition of larger B-double trailers combination and the purchase of additional new trailing equipment to meet some of the growth demands. Rural generated record sales for the first half of 2022, coming in just under 82 million. In the financial year 2022, Rural will have the benefit of a full year trading from the Woolgoolga branch, which opened in March 2021. Rural's simplified operation model allows the growth through the addition of the new branches in new horticultural regions not serviced by the group. The group remains focused on delivering growth, long-term growth, with the maximised value of our customers, staff and mainly shareholders, with all future growth incentives targeting double-digit return on investment capital. Transport growth for 2023 will focus on delivering a rail expansion with the operation of 400 rail containers. Transport will also focus on increasing operation capacity for the road operations. Rural will continue to focus on expanding its network to new regions, continue to diversify its product mix. Rural remains focused on expanding in high growth regions. The outlook remains extremely positive for the group and the division that it operates. The group will continue to focus on diversifying our geographical presence for the region we operated in, as well as the range of service we operate across the divisions. Widespread rain events did cause some operational distributions for the group recently. However, a positive out of the distribution has been improved in water security in key growing regions in which we operate. The majority of them believe they have enough water for several years without the need for additional rain. Import-export volumes are returning with the increase in the available air capacity with international flights. Demand for road service continues at all-time high, enabling the group to be confidently investment in additional capacity to meet some of the demand. Rail logistics service demand continues to remain high. The additional rail containers added in 2022 will continue to deliver volume increases for 2023 financial year. Rural outlook is positive with the water security for growers, underpinning confidence in the regional areas. Thank you.
Thanks a lot for that presentation, Kim. It was great to get an insight into Lindsay's outlook and what they're doing at the moment in terms of their projects. Just a few questions that have come throughout the presentation. Is the opportunity to further profitability expand the number of rail containers above the announced target of 400 by June 2022?
Look, we would like to expand the rail into dry. At the moment we're doing refrigerated. We'd like to look at doing dry. You know, our goal is to expand it to 500, 600. We're working with Pacific National at the moment to require more slots. They've got more railing equipment coming in 2022, 2023. So yeah, we have got a goal. We'd like to take it to 600 as our optimum level, but now that's back to Pacific National to see where we end up from.
Thanks, Kim. On to the next question. What initiatives are underway to improve financial performance of Lindsay Fresh from the current assumed loss outcome?
We went through the floods in January. We've recovered from that now. The business is trading well. Export is going well. We're starting the citrus season at the moment. We're expecting to do over 1,000 containers of export of citrus. Imports are already picking back up again out of America. We're seeing that coming from there out of Mexico. So we see that by June, that'll be back into full trading. A lot of export fruit at the moment across the regions. So yeah, we see that being back to by June, absolutely back to where we were before the floods.
Awesome. And just a final question, based on the underlying profitability achieved in the first half of 2022, the share price produces a low PE. Are there reasons for this? And are there obstacles to the H1 22 profitability rate being at least maintained in the short to medium term?
We always find that our third quarter of our business is always the slowest quarter, but this year that's turned around. We've had the best third quarter that we've had since we've been public, and we've seen that by working over the years to try to fill that January, February, March. We obtained that this year. We believe we can do that in the years going forward. And that was a quarter that always took the business, backwards. We'd go good for 9 months, and 3 months we'd hand it back. So at the moment, the strategy is working very well between rural transport, the rail, and the fresh to be able to cover that. So we're very happy where the business is at the moment after the 9 months.
Perfect. Thanks a lot for your time today, Kim. And that concludes our session on the NWR Investor Conference. Appreciate your time and good luck going forward.
Yeah.